Dwayne Duggan, Remax of Boulder video podcast. Today we have Greg Osborne from Bridge Capital Resources. Greg is a past president of the Colorado Mortgage Lenders Association, so we've got a lot of experience here. Thanks for coming today,
Thank you
Greg.
for having me, Dwayne. Great to be with you.
You bet. Thanks for being up here. So today's topic is about hard money. In this rapidly moving market, sometimes it's great to have a hard money resource when you're a buyer. So that's what Greg does at his company. So let's start off with saying what hard money is, because sometimes people envision the back alley transactions and really mean collection techniques. Is that what hard money is? Is that what you do?
It's not what I do. Thank you for the opportunity to clarify. Hard money really should be called easy money.
Oh, okay. That's a good comparison.
The hard refers not to the collection tactics that you are fearful of, but more so the asset securing the loan.
Okay.
So we are collateral-based lenders, and we have a hard asset securing our loan, which is the first deed of trust on the property or some other asset that's tangible. So hard refers to the asset, not to the collection techniques.
Okay, so it's totally different from when you go to your typical 1 to 4 unit Fannie Mae lender. Nothing compared to that at all. In fact, it's sort of the ease of the process. Like right now, appraisals are a huge problem in that world. So how about what happens relative to an appraisal in the hard money world?
So in my company, at Bridge Capital, I do my own valuations.
Okay.
So I'm the one who determines value. And the real difference between hard money and traditional bank or mortgage lending type product is that traditional mortgage lenders underwrite what is known as the 5 C's of credit: cash flow, collateral, capacity, character, and credit. Those are the 5 C's of credit. A hard money lender underwrites primarily collateral, because that's the hard asset securing the loan, and character. It's always good to have a borrower with some character who's likely to pay you back.
All right. And so let's get into why somebody would use hard money. And the first really is acquisition. So what's acquisition mean to you?
Acquisition to me means acquisition of investment property. And that's a distinction I think is important to make early on, that most hard money lenders make technically commercial loans. These are not loans for owner-occupant type properties. They're considered commercial transactions. So investors who are acquiring rentals, for example, that are vacant and not cash flowing with a tenant, typically traditional companies won't make that loan. We will get the borrower then gets it stabilized, paint, carpet, occupied, 6 months of cash flow, refinance with a bank. So that's one example. Acquisition of a property that needs to be remodeled is another great example.
Okay, renovation and fix up?
Yeah, exactly. It's not in occupiable condition, or the real estate is not maximized for its highest and best use. An investor wants to come in and make that transition, so he'll use us to close quickly. We'll loan funds to remodel, and once it's done, he can either dispose of it through sale or refinance.
Okay, and what about refinance? There custom refinances that you help people out with?
Yes, I do custom refinances. There are any number of reasons someone might want to do a custom refinance. Maybe to buy out a partner, refinance someone out of a transaction, pull some cash out. I do cash out even on raw land if I like the asset. So the key for in understanding hard money is the hard money lender needs to be indifferent to the asset. So what that means is that we need to be as equally pleased with a performing loan as we are with the asset itself, because that's our default remedy. If the loan goes in default and ultimately we foreclose, it's the asset that is our remedy. So we have to be indifferent to the asset.
And the asset, and then how about down payment? Like you make those decisions. It's 100% between you and the client and looking at the asset. As far as with the down payment, it's not like it's FHA 3.5% down or 20% down.
That's exactly right. So I'm loaning a closely held source of funds, and that's typically how most hard money lenders work. We're basically investing in notes. Some people invest in pork belly futures, some people invest in real estate, some people invest in notes, and that's really what we do. So really the underwriting parameters are our own. What are we comfortable with from a risk and return standpoint? So for example, I'll loan typically up to 75% of the after repair value of a property. That's the fixed up or stabilized value of the property, or 90% loan to cost. And I run both calculations and then figure out where am I comfortable and what works for my customer, and we figure it out from there. But the valuation is mine.
And your Bridge Capital Resources, and I know you, so that you would be one of my first sources for my clients' hard money, but Is hard money readily available? Like you see there's thousands of mortgage brokers. How about hard money? Is it a very competitive industry or what's it like out there?
It's a fascinating world. Hard money is readily available. It's a highly fragmented market. There is no one hard money source that dominates the marketplace like a large bank would. Most of us are investors ourselves. So my advice to investors is to have a few hard money sources in your arsenal of vendors supporting your business, because sometimes we get loaned up.
Sure.
And since we're in Boulder, if I was loaned up, I'd go on a bike ride today, or go ski, or something like that. It's a great way to be flexible in one's business lifestyle. So capital can be finite. It's necessary to have a few sources in your arsenal, but there are a lot of good ones around.
Okay.
A lot of good ones.
And then advantages of hard money? What's the few advantages that you can think of off the top of your head?
I can think of them readily.
All right.
The one of my dearest mentors in life told me, Greg, in business you have three things. You have speed, quality, and price.
Okay.
You can give any two to your customer, but you have to keep one to stay in business. So I give speed. That is the application to close. My record, by the way, is 29 hours.
That's
from
pretty
application
fast.
to close. So you pay for that.
You
That's
still
part
get
of it.
title insurance, right?
I do get title insurance. I get hazard insurance. I get builder's risk.
Okay.
Yes, I get all that, and flexibility, which I call quality. It's a quality underwrite. It's a light underwrite, collateral based underwrite, and in exchange for that, I keep price.
Right.
So it's more expensive than traditional financing, and one could think of it in terms of perhaps using your credit card to buy an appreciating asset.
Okay.
You know.
So expenses are more cost up front, like in terms of points, and
Yep.
then a buyer or a client shouldn't expect like the 4.5% interest rate for the 30-year fixed rate. It's
Right.
usually higher than that.
It's usually higher than that, and that's the trade. You
Right.
get it quickly and you get it easily, but you pay a premium for that. And the other thing to note is, hard money is not intended to be a long-term financing vehicle. It's short-term. So any smart investor is doing the math to make sure that their transaction can pay the freight and that the time savings is worth the difference.
Right. So what's your typical loan that you keep out there? Is it 3 months?
So,
and what's the max too?
So I'll go 1 day to 1 year.
Okay.
So my target is 6 months.
Okay.
So why would someone borrow money for a day?
Right.
That's called flash cash. Oftentimes a title company will make an investor own the property for a day in order to get in the chain of title versus assign their
Gotcha.
contract or their
Right.
LLC, what have you. So I'll do flash cash, I'll loan money for a day. Matter of fact, I would love to make 365 one-day loans.
Sure, that'd be profitable.
It'd be awesome. It'd be great.
So,
But 6 months really is the target, and that really is the time frame that's most appropriate for an investor too.
and if they're doing renovation and that type
Yeah.
of thing, so.
Get in, get out.
Now, on a hard money renovation type thing, do you set it up like a commercial bank might, as far as like you advance a certain sum of money to acquire, and then you have them approved for a certain amount of money for renovation, or does it not work that
It's
way?
exactly that way.
Okay.
It's essentially a traditional construction loan with draws, inspections, lien waivers, all that
Perfect.
stuff.
Okay.
Yeah.
Any other thoughts that you can think of that would interest a client as far as using hard money?
Well, I would just say in this day and age, there are a lot of very creative lenders out there that are doing good things to help investors, and investors just need to weigh the trade-offs of any potential, any source of financing, weigh the trade-offs.
Okay. Greg is an excellent resource for hard money lending, and because he was past president of the Mortgage Lenders Association, just a wealth of experience here. Greg, give everybody your contact information
Will do.
and your website.
It's Bridge Capital Resources, and my website's bridgelending.com. My phone number is 303-475-5873.
All right. Thanks for being here today.
Thank you, sir. Appreciate the opportunity.
Dwayne Duggan, Remax Boulder Video Podcast, signing off.